You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose. How are you guys doing? Welcome to Masters in Trading Live. I'm on here every day the market's open, 11 a.m. Eastern time. I got the chat, guys. Welcome. Yesterday, I created a tool, shared the tool with everybody yesterday. Hopefully you guys got access to it. I asked this morning, it seems like a lot of people have access to it. If you don't have access to it, I'm going to ask Chris Warder if you could drop the PDF in the chat. I'll go over the tool for you guys as well. It is a very, very important tool that we all should be using in this environment. I also want to cover copper. Okay, let's get to it. I got a bunch of stuff to do. I got to slow down. Take a deep breath, JR. Take a drink of water. Slow down. We're not in a rush. Okay, good talk. Okay, the little corny name that I gave it was Liquidity Compass, guys. Tracking the market's liquidity regime. So what I did, and I'll show you guys, this is what the tool looks like right here. And so what I did is I just wrote to the St. Louis Fed. So it's the Fed balance sheet, treasury cash, and reverse repo. And so what I've done is just net liquidity equals Fed assets minus treasury cash minus parked cash. And so this is what it looks like. And we're able to follow literally the liquidity in the market through the Fed. So I got a couple more slides here, but oh, here we go. Let's do it this way. How to use the tool. So we have this for Thinkorswim, guys. I also made this available for TradingView. And so how this works, it doesn't matter what ticker you put in here. What we are concerned with is the bottom. And if I put this on longer term, that's where you can see it the best. So remember, green, liquidity is expanding. Red, liquidity contracting. And the reason why this is so important is because of Warsh, who's going to be the new head of the Fed. He is focused on money supply. Without a doubt, he has been a Fed governor. He always fights for money supply. So that's going to be what we need to be watching. And so how to look at this, if you go back here, you can see all this green funding back here. Market, just strong, strong, slow and steady, slow and steady. COVID right here, okay? The reason we rallied after COVID was because the Fed just printed money, right? And so there was this huge amount of money that came in. A little bit comes out, but the reason we continued to rally was because of all of this funding. Funding starts to come out, market gets weaker. So what's going to happen though is in this regime, we are not going to see the Fed come in and save the market. Warsh believes that we should, I see guys, the link doesn't work. Let me make sure that the link does work for you guys. Oh yeah, Chris, that link does not work. We'll get the link in here, guys. That link is a dead link. We'll get that link in for you guys. But this is how it works. It is really taking a step back, and right now, if we start to see some green lines, that's going to be very, very, very strong. If we start to see more red, that's going to be very, very weak. But we're looking for these different trends. We want this when the Fed comes in and absolutely just rescues the market. Okay. So Chris, he's going to share that PDF with all of you guys. I went through yesterday and I walked you guys how to use it, did the same today. But now I want to move on. Okay, Chris will get that PDF in there. And if you have any questions, I'm on live every single day. The market's open 11 a.m. Eastern time. So just come and ask in the chat. If you're watching this recording tomorrow or any day the market's open, I'm live 11 a.m. So just come ask hey, it works. Love you guys. Okay, this one works. Good, good, good. PMI. Guys, yesterday's PMI print was no joke. Yesterday's PMI print was up here. Anything above 50 is expanding. This is a very, very big number for the USA. Strong. Okay, copper. Bullish copper. FCX, BHP, copper. Bullish, 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 bullish copper. Demand, supply, price is going to go like that. This chart, not just about copper prices, it's about copper discovery. Get rid of that. And it tells you why copper is structurally scarce. So, not a lot of copper being found, guys. Right? All this copper is back here. It is structurally scarce. This is an absolute problem going forward, and all the data points to it, and all the data reinforces that copper is a very important place to be invested. As time goes on, we're finding fewer deposits, they're lower quality, and they're harder to mine. Copper isn't getting cheaper to produce, it is getting harder to mine. 2 days ago, on Friday, I guess, I shared a play in copper that we can get long for the next 10 years. I'll share that with you guys again. It's in an ETF, DBB. DBB gives you copper exposure, a great long-term hold, not really trading options on DBB, but if you want long-term exposure to copper that's still not crazy valuation, this is a good option. Sicko is a cool one out of Latin America, but this thing is just gone. BHP is kind of still somewhat investable. And then FCX. These are all names we want to buy on any pullback whatsoever, but DBB right now looks the best. And then maybe BHP, it's kind of tough because we just took off a big, huge trade in BHP, but any kind of pullbacks, guys, and we want to be long copper. Okay, I'm going to hop back on here. So Chris shared the PDF. Make sure that you guys can use that tool. Remember, that tool is literally a simplified way for us all to watch liquidity. We give this to our members. We give this to anybody taking the challenge. And this is free for anybody who watches our YouTube videos because this is just really important. And I want you to have it. For everybody that's in our all access, what we do now is we break off to our all access. I shared a trade this morning in all access. So we're buying stock and buying out of the money options. And we're going to go over that trade right now. Thanks everybody for watching. Hi. Hey guys. How you doing? We're hopping back on for all access.